There he is, ladies and gentlemen. Right there. And if anybody's wondering, that's Malice from the chat room. He's now taking over full operations of the stock market trading, futures, currencies, all that we have to offer here at Hit the Bid, because I'm focusing my attentions on sports gambling. I don't give a shit. And Phil, what was your name? Phil Battaglia? No, was it Phil, I don't know. My therapist that I went to when I was, my ex-girlfriend back before I got married was convinced I had a gambling problem. She forced me to go to therapy. Phil, how you doing? Let me ask you a question like I asked you back 15 years ago. If you don't lose money, is it a gambling problem? Okay, so the Major League Baseball season has started, and you know what I do. Basically, I have a few things that have been working for years. I've been sticking to them. So far, the Major League season, I'm 5-0. We've got 3 wins against the Yankees, 2 wins against the Mets. 5-0 right now. And if you've been a follower of the program, I explained to you when and why I take bets against the Mets and the Yankees, leaving emotion out there. Well, it's not difficult for me to bet against the Mets, but against the Yankees, you know, or personally, I know when they're going to lose. So I might as well make some money on them. Now, I can let you in on a little secret. I think I might have talked to you about why I would want to bet against the Yankees in that game against the Royals yesterday. And there I was thinking that maybe I was going to finally take a loss this season. But no, proven right again. The Yankees cannot and will not be a good team this year. Because here's what I keep saying about the Yankees. Jabba Chamberlain. Now, if you're obviously I talk to people all across the world right now, and but if you're focusing on New York, they have this pitcher Jabba Chamberlain who was a threat. This most fearsome guy coming out of the bullpen in the 8th inning. You knew the game was going to be over because he was coming in the 7th and the 8th, and you had Mariano in the 9th. But now they decided to make the guy a starter, taking all the mystique, all the frightening capabilities that this guy has right out the door. Now he's a starter. You get to see him more. Takes away the the mystique about it, the whole thing. And you have to rely on some losers coming out of the bullpen like Coke, Mr. Coke, our rookie who came in and blew the game yesterday. And like I said, right now, every game I've bet on so far, I've taken an underdog. Okay? So you're getting money in your favor. Forget the stock market for a while. You know we're going to be bouncing back and forth on earnings reports this week. And let me tell you one thing. Stop gambling. Okay? If you want to gamble, hang out, wait till I tell you who to bet against in real sports gambling, because at least you can make some money there. Gambling on these earnings reports, when they come out, here's why it doesn't work, okay? Wait, I have that on repeat. Let me explain to you why gambling on options during options expiration week and basically any time is not a good idea. First of all, the options, if you watch them closely, they increase in value when the earnings report is due out, okay? Now, the stock could be doing nothing, and you'll say, how come the price of the option went up when the stock hasn't done anything over the last couple of days? Because they're basically juicing it up because they're expecting the stock to do something after they report their earnings. Pretty easy explanation right there. So you have to pay more to set up any kind of strategies. Now, I know a lot of guys like doing the stratos. That's when you buy a call and a put, hoping for a big enough move to compensate for the losing side of your option. So if you're buying a call and you're buying a put, if the stock, let's say you pay $2 or $1.50 on each side, the stock has to move at least 3 points for you to start making any decent money on the trade. Obviously, if you go out a few months away, the losing side of your option strategy is not going to decrease in value too much, so it's a little bit easier to make money that way. But again, you're gambling on the fact that you think the stock's going to make a big move. Now with RIM, it worked out, and with certain stocks, it's been working out. The thing is, you're laying out so much money that it is difficult to, cash in on these things. But what it comes down to, and what I've noticed over the last year or so, because I used to love doing this. I used to love setting up strategies and guessing which direction the stock's going to go. That's just, you might as well flip a coin and bet against, the Mets or the Yankees and just forget about trading. You might as well just gamble on sports and move to Vegas. if you're going to pick a direction on what the stock's going to do. Because how many times have you read a positive headline where the stock, oh, they had a record-breaking quarter, the revenues are up, blah, 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 but apparently the street's going to focus in on the one negative thing out of the report and the stock tanks. Or there's no negative news and the stock tanks anyway because they're just selling on the news. Whatever the explanation, there's always an explanation after the fact. Bottom line is right now the trading has been better after the fact. So let's assume, and this is how me and my crew, we made a tremendous amount of money in 1999, 1998, 1999, 2000. After the company will report earnings, you wait to, obviously that first 20 minutes is noise. And if you can catch a good move during that first opening of it, you know, that's just another way of gambling. Wait till the stock makes some sort of trend. And hopefully, what was the real moneymaker was, let's assume that the stock gapped down, like let's say 10% on the earnings report. $60 stock, well, 10% on $60 stock, a lot of points, but assuming it's gapping down and the stock starts to gain some strength, so you start to get long, and then it continues their upward trend. If the stock actually goes green, it's about 80% of the time, 80 to 85% of the time, the stock will remain in the uptrend once it goes positive. Once it gets through the bad news or this whatever the news was of the earnings report and gets some momentum to the upside, it usually stays green. Otherwise, and the reverse is also true, and the reverse is even better. If the stock's gapped up and starts to get weak and they start pounding on it, 80 to 85% of the time, if it goes red, it's staying red for the day. And as a trader, what I would do is, I don't care what it's going to do for the rest of the day or the week or whatever. When it does make that crossover, I would just load up, you know, I'm talking 5,000, 10,000 shares, and play that initial break to the other side, that trend reversal. The positive ones actually were awesome because we're talking about 1999. Everything went positive and went up 10 points, so it was easy. But stop gambling on these numbers. So when I get these emails about what do you think about the earnings reports, I don't know. Nobody knows. The company doesn't know. Nobody knows how they're going to react to the earnings. Once in a while, you get a feeling about a stock that should come out with something good due to the environment and the field that they're in, that they should be, you know, like with the Akamai last quarter. You knew Internet was gone out of business, Savvis had gone out of business, Limelight was going out of business. And basically, Akamai was one of these companies that made it through the Internet bust. They're one of the only companies that's actually doing the right thing. So the market was, this was like I think November, the market was actually making a move up. And you're looking at a company that made it through all the, you know, terrible part of the economy and survived. You just had to figure that they'd have something positive to say, and they did. And the stock actually doubled, almost doubled from where it was last quarter. So certain situations, like, you know, we were betting on the Smith & Wesson earnings a quarter ago, and the Ruger, just basically when everybody thought the world was coming to an end, buy an automatic weapon and some ammunition. So that worked out. But everything else most of the time is just straight up gambling. And, you know, if you just want to do that, you might as well get a free beverage and a lap dance and have some woman who's talking to you that's really, really hot, and you're confused whether or not she's a hooker or not, and you're embarrassed to ask her straight up because you want to just relish in the fact that maybe this good-looking woman has come up to you and started a conversation out of the kindness of her heart, and she thinks that you're good-looking, but it turns out she actually is a hooker, but you were just too embarrassed to ask, and then she was wondering why you didn't ask her, and you could have had this whole thing up in the room, but never got there, and you know, you regret it for the rest of your life because you're in a different state and your wife's home with the kids, and you know, it could have been a situation, but I think I went on way too long with that explanation about hookers and whatnot. All right, that never happened to me. That was just making up that story right there. So it's Monday, market's gapping down a little bit, and I'm sure it's gonna go higher. Oh, I'm sticking my neck out. The market wants to go up, and I hate it right now because I feel like the prices of certain stocks are at the point where I'd be selling them if I was still in them. So it's hard for me to embrace the fact that we're going to keep going higher. I'm waiting for this sucker rally to just reverse itself so I can make some money on the downside, but I'm sitting and waiting. So, see ya. And don't forget to watch CYOU, the Beast.